the guys that try to patent new energy technologies, whether it's water-powered cars or like hyper-efficient gasoline engines, where it's not like 20 miles a gallon, like additional,
like 100,
300 miles a gallon, shit like that, right? The guys that try to patent those, they typically end up dead from mysterious poisoning, like two-shot suicide. I know that stuff's out there. I know a bunch of the audience knows that stuff's out there, right? That's where you have to separate out like what your conspiracy theory mind is telling you is possible from like what is the reality on the ground today. And reality on the ground today is basically pointing me to the fact that there's, I think, a commodity cycle that we're already well into, and oil is kind of the last to go in those cycles.
Another awesome show with Ben Kelleran right here on ESW.
Hey, good morning, good evening, good afternoon, folks. It's V the Gorilla coming to you live on this edition of Kelleran's Corner, live here on ESW Rogue News. And we have with us the man of the hour, Ben Kelleran. Folks, you can find him and his work all in the description box. The links are down below. And we have Cowboy working the airwaves, making sure the broadcast is coming out smooth and clear. Our paid sponsors, AlgoFactory.tech, and I'll tell you right now, they're giving away a free algorithm. Click the link in the description box. Learn to trade like a hedge fund pro, whether the market's up, whether the market's down, or it's going sideways. And you don't want to lose your mind. Let Algo Factory show you the way, how to build the algorithms that'll trade on your behalf 24 hours a day, 7 days a week. AlgoFactory.tech. That being said, Ben, good morning.
Morning. Thanks for having me on. Definitely excited to get into some of the stuff going on. And there's a lot happening these days, whether it's the Epstein circus or the what's going on in precious metals. Definitely lots of stuff to pay attention to. But I think we also want to get into what's been going on with energy, and specifically some of the energy stocks, which are having a pretty strong run here to start the year. So I figured we could get into that as well.
Yeah, absolutely, man. Let's go for it. The floor is yours.
Yeah. So the place I'd like to start with is actually, I'll share my screen here so people can see what I'm looking at. But basically, if you look at the move that a lot of the major ETFs have had, let me see if I can find this. Like OIH, if you like zoom out, is breaking out to post-COVID highs. And that's got a long way to go to get back to like 2008, because that sector has just been dumpster fire for like 15 years. XLE is going to all-time highs. XOP is, again, like highs for the last year, but still has some work to do to get to where it has been in the past. But basically, if you look at like the year-to-date performance on everything from oil services to the smaller producers to the big guys that are Chevron and Exxon and whatnot, like you're seeing money flow into these places. And that's with oil at 65, somewhere in there.
Mm-hmm.
Yeah. So 64, Brent's at just under $70, right? So I think you're starting to see like there's a lot of people that have been offsides on the energy trade, and it's like I've been early to be bullish on some of the stuff, and there's actually been some consolidation in one of the major offshore drilling subsectors, and that's maybe something interesting to talk about as well, where you've got Transocean and Valaris merging. Like they are two of the like 3 largest offshore drillers, and now they're merging, or Transocean's acquiring Valaris technically, but it's basically a merger, and they're going to have like basically very dominant market share, and that's where you're going to see day rates for offshore drilling, I think, skyrocket over the next 3, 4, 5 years, just because of their backlog and whatnot. And I actually have a guy who is deep in the weeds on this stuff coming on the podcast tomorrow. So if you guys are interested in that topic, definitely keep an eye out for that episode. But he's deep enough to know like the different bond issuances, like each equipment, like their specs, like he knows everything about kind of this sector. So definitely excited to talk to him. But basically, this thing is going to be the offshore drilling equivalent for of Exxon or Chevron, or like one of the big guys for that subsector. And like we've kind of talked about with other things, there's no one building new capacity for offshore drilling because in the last cycle, basically there were a bunch of bankruptcies, lots of shipyards got into trouble, lots of problems. So the actual new build book right now is extremely low, and these things take 5 years to build. So you're basically consolidating an industry. You got very favorable supply and demand setup, and I think we're going to see very high day rates, and especially if oil starts to move, like you're going to see these majors start to go and look at offshore Africa, offshore, right, expanding from Guyana, right, all these different places. And if the bottleneck is right offshore drilling equipment, right, that's usually a good place to invest. So that's what I have for energy. We'll see if the rest of this year kind of looks like January has been. I kind of think we're at a point where, like, I don't know. This is maybe a good question for you guys. It's like, do you guys think that oil is going to really start to move where, like, we start looking at 75, 80, 85, 90 and like keep rallying from there? Or is there kind of like a hard ceiling on oil at 80, 90 bucks, like based on government policy?
Yeah, I think there's a hard ceiling right now. It's been pretty tepid and gone sideways for the longest time.
Yeah.
Yeah, I mean, I like Tom Luongo's look at it. Brent crude is not a deliverable contract, and so much money goes through that. I think until you kind of get that out of the way, it's just going to be completely controllable.
Yeah. No, I think that's definitely a big part of what you're seeing in other markets as well, is like how the paper games can manipulate the price of an asset. And right, this has not just been going on for 5 or 10 years. This has been going on for basically our entire lifetimes, if you really look at it, especially for the precious metals. And I think the biggest thing that's going to be interesting to see with oil is if you look at policy and what they're doing, I think they can keep it under 75, 80, like somewhere in there, like 90, 100 hard cap for a while. But it basically just sets up to go way, way higher whenever it does break through, because I think there's no management team of a large company is going to go and spend billions of dollars up front to explore, develop, drill a offshore Africa field with oil at $75 a barrel, right? And they're not forward looking enough, or they're on the quarterly game, so they're not interested in putting their job at risk for that future if they don't see, like, hey, when is this going to pay off? Like, can we really be spending billions to go from scratch in Namibia or some of these different places? And there is some like action going on in that area, and I'll get into that on the podcast I record tomorrow with my guest. But if you look at the amount of capex being spent, like it's just not enough. Like the oil's out there. Like I don't have any doubt that there's, enough oil to last effectively forever. But as far as the spending to get it out of the ground, I have questions on that. So anyway, I think the other thing I wanted to get into is kind of the pullback in gold and silver, which was obviously more exaggerated in silver. Like I think there were some people that were maybe going to get carried out if you were closing at 110, 115, whatever it would be. There's all these different speculations about, it was such and such group that did this. And it's basically just a giant paint the tape campaign. And you could tell that the way it was trading is basically, I think is a technical term spoofing, or I can't remember which one it was, but it's basically, the high frequency, you put in your bid, you pull it, and just basically rinse, repeat. And you look at the volume. I think someone was saying that the amount of volume that traded on that giant like crash day last Friday of the month for January, I think they were saying it was 3 times the annual mine supply for silver.
Correct. It's so exaggerated. It's bullshit.
It's just a joke, right?
It's outside of reality.
On its face, anyone can see that and say, so in one day, we're going to have this paper derivatives game that trades 3 times the volume of the annual supply, like it just doesn't make sense. And this is where I think the US needs to figure it out and say, look, we can play games like the LBMA, or we can start to shift our mindset to, hey, these are physical contracts and physical products, and they are designed to physically deliver a commodity good, whatever it is, at a certain point in time. Not, hey, the price is going up, I want to be long. The price is going down, I want to be short. Right?
But Ben, what are you talking about? Complete the paper.
Yeah, no, it's it is funny to see, because it's just gotten more and more exaggerated. But with all the liquidity floating around, like, it's going to end up somewhere. And so if you can create this stuff out of thin air and take transaction fees or different things like that, then the exchanges are going to do it. So I think the opportunity is still in a lot of the mining space. Like, none of these guys are pricing in $5,000 gold or $80 silver even. And even if you just look at what the average price was for Q4, right? They're just starting to release earnings now for some of these companies. Like, it's going to be blowouts basically across the board for producers. And I think people are going to wake up and realize, hey, like, there's an opportunity here to own some of these mining stocks if you're understanding the risks, right? You don't go all in on one name, but if you put together a basket of them, like, there's going to be hits and misses, but the hits are, I think, easily going to make up for any mistakes. So the other thing, Platinum has been Platinum Palladium in the same boat, and I think there's good potential for a massive rally in those as well. But it's going to take some time, is my guess. That it's not going to go right back up to 2,800 in 2 weeks. But I mean, the way I kind of look at this stuff is, if you have a long-term bullish view, like, are you going to try and trade this when it looks like, oh, this is a massive breakout, we're heading for 3,000, and then market comes in and someone caps it and then it's down to 2,000? Like, I don't know. That's like just a sign of manipulated markets. It's hard for me to have an edge on what that looks like, but I think there's lots of opportunities, lots of things going on in the market, and I think I think we're getting to a point where we're starting to see price discovery on some of these different commodities.
Yeah. Agreed.
Yeah. I think what we're seeing, or what we've seen with silver, might eventually resemble what we see with oil once oil is able to break free. But I'm just wondering if we're going to see, let me fix the screen here. I wonder if we're going to see like a change in the technology such that, oil doesn't matter quite as much anymore. Like, I know it'll always matter. And historically, if you look at energy, every time a new form of energy has been added on, the old form continues to be used, and it even grows in use. That has always happened. So by that logic, then yes, oil will continue to be used and it'll grow in use over time. So if that's the case, then yeah, it's a question of whether or not we can discover something better or implement something better that we already know exists, and whether or not that's going to cut in on the oil market. History says it won't. We'll see what happens, right?
Yeah. Well, I know I was going down this rabbit hole recently on like the different technologies for free energy and like water powered cars and some of the stuff. I don't know if you saw, I can't remember the guy's name, but there was a recent Tucker episode where the guy was talking about like the pyramids and some of the stuff in the Grand Canyon. Like, it was a very interesting episode where they talked about that and remote viewing and all these different things. And the guys that try to patent new energy technologies, whether it's water powered cars or like hyper efficient gasoline engines, where it's not like 20 miles a gallon, like additional,
like 100,
300 miles a gallon, shit like that. Right.
Yeah.
The guys that try to patent those, they typically end up dead from mysterious poisoning, like a 2-shot suicide, like all these different things. Right. So there's definitely groups out there that I think are aware of this technology. I think that they are not ready for it to go mainstream. But if you do get something like that, I have no idea what it means for energy broadly. But if you do see something like that becoming mainstream, then you're gonna have issues for energy producers. And I have no idea what's gonna mean for oil services, but that's where you kind of step aside and say, all right, like the thesis changed. So like I know that stuff's out there. I know a bunch of the audience knows that stuff's out there, but will it become like a mass adoption type scale product and service? Right. That's where you have to separate out like what your conspiracy theory mind is telling you is possible from like what is the reality on the ground today. And reality on the ground today is basically pointing me to the fact that there's, I think, a commodity cycle that we're already well into, and oil is kind of the last to go in those cycles. So yeah, we'll see what happens. But that's kind of my view, is like you have to be aware of all this stuff, but I don't think that like just banking on, hey, there's going to be some new technology that comes out of a black hole in the government and it's going to save our energy demand or whatever, right? I don't think that's something to count on. So
yeah. I got to dip out, guys. The workers are here.
V the Gorilla, thanks for coming on, my man.
Thank you, Ben. I'll see you.
Good one. See you. Yeah, the other thing that I wanted to get into today was a bit of the trip that I did recently on Silver Valley. And I know that we're kind of going to talk about it last week and then got sidetracked, but I want to get into this a little bit and just share my screen, a couple pictures and whatnot. But basically, if you ever have a chance to go up to the Coeur d'Alene area in Idaho and kind of head out I-90 to the east, whether it's Wallace or Mullen or Kellogg, there's a ton of history in that area as far as mining.
Okay.
And a lot of these mines have been online for, over 100 years. And some of them are like restarting, planning to restart, but it's basically a mining country through and through. And this picture right here is from the Sunshine Monument. It's basically from one of the most deadly mining accidents in U.S. history. There's basically a fire and there's carbon monoxide poisoning because you didn't have a secondary shaft for people to escape. But
whoops.
Yeah, that's different requirements back in the day for
hard
safety.
lessons learned early, right?
That's the thing, is like mining is still very dangerous, but it's light years ahead of where it was 30, 40, 50 years ago.
Yeah.
And you see some of the stuff where it's gone overboard and some of it's ridiculous. Like, but the overall, like, it's a very good thing that we have, I think, most of the safety requirements that we do. Like some of them, they are just a joke as far as like what's required, but for the most part, like making sure guys are safe doing that stuff, like it's very important. The other thing, I was able to drive up from like through McCall to Coeur d'Alene area, and you don't realize like how big Idaho is until you actually drive from basically one end of the state to the other. And what you'll realize is
it's a long state for sure.
Yeah. But what you'll realize is that there's a lot of basically untouched land that is out there with potentially a lot of mineral resources, a lot of different things. And we're going to see, like, I think the way I'd put Idaho as far as natural resources is it's very similar to what Nevada was like 20, 30, 40 years ago. And that you're going to see, some companies pop up in Idaho that have, I think, some very rich deposits, because you would basically be starting from scratch. So I think there's a lot of stuff out there to find. That's definitely something to think about. But the other thing you'll get from visiting a place like this is just a bunch of stories, whether it's talking to the bartender, talking to people that have worked with some of these different companies. Like the guy I talked to at, he worked at Hecla, the Lucky Friday mine. And that was after working 3 years at the Galena. And he basically said that there's like $200 or $300 million worth of repair that needs to be done on the Galena mine to make that a modern mine. And it's pretty interesting to hear what he's talking about, because he did all the maintenance stuff. So he's not actually down there drilling for ore, but he's in there, right, working on electrical and water and all these different things that you need to have. That's kind of the support for the guys that are getting the ore out of there. But he basically went in and was like, yep, they need a new mill, they need a new shaft, they need a new hoist, they need, like, went down the list. And it's like, oh man, like the people on the ground, they know this stuff inside and out. And some of these companies don't always make those long-term decisions, but you can get a really good view, like talking to people. And the other thing I thought was funny is that the locals, they really don't like the Canadian companies and the Canadian management teams and whatnot. But the other thing is, I was talking to, this was later in the week, but I was talking to the guys at Idaho Strategic, and they said there are like multiple projects in Idaho that would be ready to start, but it's just they're run by lifestyle CEOs, guys living up in Toronto or Vancouver. And you look at how fast these projects have progressed through the stages, it's like it's just going too slow. Like, I don't know how anyone would own these things, but these would be large assets if they came online, and they're just basically collecting a salary and milking a paycheck. But
You think it's slow by design?
yeah, exactly. They get stock options, they get big salaries, the board members get paid, all that stuff. But yeah, this is actually the layout of the Galena mine. So it actually connects to the core shaft over here, and then the Cowboy off to the side. And like, it's a large operation, but it's basically, I would say, was it built in the 1930s, 1940s, somewhere in there? There's a lot of stuff to be done that they need to do. So it's pretty interesting. Like, the ore is very rich in Silver Valley. Like, it's the U.S.'s largest historical silver producer for a reason, but it's some of those operations have been neglected for a long time. So this one is the stock that isn't public yet. It's the Sunshine Mine. I don't know if you're familiar with it, but this is where the accident was that killed 72 miners in 71? I think it was 71 or 72. But basically, the guy who owns this is his name's Thomas Kaplan, and he owns like 73% of it through his private company. And they're planning a restart here in the next year or two. And they have a feasibility study that's, I think, is coming out in the beginning of 2027. Yeah, Q1 27. I got to talk to the technical services manager at the Sunshine for about an hour, and he said the same thing about the Canadians. But like, getting into the Sunshine operations, like with him, like if that thing was public, oof, like they're going to be producing 6 million, 7 million, 8 million ounces of silver every year. And the grades they get are just basically what I would call the best in the world, or right up there. He was telling some stories about what they considered waste in like the 1910s and the 1920s at this mine. And the rock that was basically 100 ounces per ton of silver was basically packed away, and they didn't even bother with it. It's like, that's how rich some of these veins can be. And just for some kind of comparison to modern mines, like what people consider high grade today, you're looking at like 10 ounces a ton type deal.
Okay,
Right?
yeah, that's an order of magnitude. It's huge.
Yeah. So like, they're going to be looking at, I think, an average of 30 to 35 ounces a ton today. And they've got like decades of reserves. So the way I'd put it is, like, keep an eye out for an IPO of the Sunshine Mine. If it does IPO, like, do your math on the valuation. But the silver is definitely there. It's definitely going to be a cash cow anywhere over like silver at 60, 70. I mean, hell, like their all in sustaining cost is probably going to be like $10 an ounce. So,
Oh wow, that's nothing.
yeah. So
When are they opening this back up?
the plan right now is sometime 2028. Sounds like they could basically fire it up whenever they choose. So, like, they're doing the feasibility study now. It sounds like they could basically just start it whenever they feel like it's time. So there's going to be the voice in the back of their head saying, hey, silver's high enough. And if we get what I think could be coming for silver, where we get a sustained rally and then we hold it for more than just like a week blow off top, I think you could see this mine coming online fairly quickly here. So I would guess like back end of 27, so maybe a little bit earlier than they're originally expecting, but definitely if this one IPOs, just keep an eye out for that, because it's a massive operation and they're actually actively ramping up like employees and all these different things. So it seems like they are gearing up to get things moving. So also went to the Lucky Friday. This is like Hecla's big operation in the area. Sounds like they're kind of lazy on the exploration side with their surrounding land package. So that annoys some of the locals, but they're a large company. I understand why they have a little bit of different approach to it. But the last one I saw was the Bunker Hill, and that one's actually restarting Q2 of this year. And that one's like big mine. Like it's a mix of zinc, lead, and silver. So it's more of a zinc mine, but that was where the old Superfund site was. So if you go into the EPA history and look up Bunker Hill Superfund, you'll find that like because of the smelter they had there originally, it was basically like they didn't have the same environmental controls. So it's like, okay, you can penalize someone or put together a fund after the fact, but like all these companies, they would just dump waste in the river and they would have emissions going to the air and whatnot. But they honestly didn't know there were no requirements. So what are you gonna do? So but that mine's coming back online. They have a new mill. They have basically
is that the mine that basically polluted Coeur d'Alene?
Well, it's all these mines with they were all dumping into the creeks and rivers that flow into Lake Coeur d'Alene. But the Bunker Hill is the one with the large smelter that is putting off emissions and particulates. That was the Bunker Hill. Yeah.
Okay.
So the thing on this one that's interesting is like the stock has been diluted a lot. So it's I don't know any of this one, but if it does restart, like it's a big operation. Like the size and scale of it is just like you can see from the highway, just like it's huge. You're driving past the bunker for like a good 60 seconds. Like it's a huge operation. Whereas like the Lucky Friday and the Sunshine, like you wouldn't know the size and scale of the underground from the operation at the surface. Like it's big, but it's not like, whoa, this is massive. With the Bunker Hill, you get the sense that like it's massive. So definitely something to keep an eye on. The most interesting conversation I had was actually with the CEO and his son of Idaho Strategic Resources. So I got into meet with them, and they actually have the kind of Murray Gold Belt, that property consolidated, which is just north of Silver Valley. And this is an area like, are you familiar with the Guggenheim family or however you say it?
Yeah, the one that have the museum in New York.
Well, yeah, but do you know where their wealth originally came from?
No, not off. I used to, but I've forgotten.
So it's ASARCO, which was American Smelting and Refining, and they had some major operations in Silver Valley, and they also had a dredging operation on Pritchard Creek, which is where the Murray Gold Belt is, and they would basically drag the creek, and you collect up all the gold that way. That is kind of come out of the lode deposits in the hills. And the Sunshine, the guy at the Sunshine and the guys at Idaho Strategic, they basically said that it was so rich that they would have to clear out the dredges and collect the gold 2 times for every run of the river.
Oh, wow.
And they would be finding massive chunks. It sounded like they ran the dredging operations for like 10 years. But that was like a big part. Like the Guggenheim family is based off the money that was built, or the dynasty that they built from mining and refining and all those things. So people like don't realize that up until like the tech industry and how that's developed, like the old money families are either built on banking or commodities and potentially like railroads, right? Those are like the big three for old American money. And you look at some of these things, it's like, wow, like there's so much history in some of these different places. But if you look at a company like Idaho Strategic, they're the way they do things, I think they do it right. They're basically a public company, but it's also a family business. So there's like two families that are, one guy's the CEO and his son like works IR, but then another family is like technically CFO, but like he's doing operations and whatnot. So that's one where like definitely keep an eye out for companies like that. And I think they're some of the best operators up there in the area. So the last piece, where was it? I also got to talk to a guy named Tim Hunt, and he has the largest cabinet business west of the Mississippi. Huh. So like if you ever go to Spokane or Liberty Lake and you see a giant like manufacturing facility off the highway in Liberty Lake, like that's Huntwood Cabinets. That's their business.
Okay.
So it's pretty interesting. He actually owns, was it 20% of a company called Patagonia Gold. So I was able to get in touch with him and get like a quick meeting and talk with him about the story on Patagonia Gold and how it was a 20-year thing to get to production. But it sounds like they're starting production here now, basically, and it's going to be an interesting couple of quarters for that one. So that's kind of the wrap on the kind of Silver Valley trip. But it was one of those things where you can learn a lot online from some of these investor relations and presentations and whatnot. But actually going in person and talking to these people, you get so much more information, right? It's just, if you're willing to ask questions and show up, like you'll get a bunch of people willing to talk to you, and they love talking about this stuff. So you get a bunch of rumors, you get a bunch of gossip, and that's part of the fun. So
yeah,
definitely enjoyed it. Yeah,
that's really cool, man. Yeah, it's never going to be the same as, talking to people. I know, not that this is terribly related, but where we live, my wife went to like the library. She took the kids to the library, right? And the librarian was talking about how not that long ago there was an issue with not enough water, and now they've built hundreds or thousands of homes out here, but they haven't increased the water intake. And it was maybe a decade ago that they had a major shortage and it was a problem. And now there's more water consumption than they haven't done anything about the water problem. But you wouldn't hear that, right? I mean, it's just something that people who've lived out here for 10 or 20 years, they know because they were there. You know, it's like, you're not going to find that in the paper. I mean, you might if you go look
if you look up paper archives every day for 20 years, like,
like exactly. I mean, nowadays with AI, like if you're searching for it, but talking to people, I agree, dude. Boots on the ground. Just, I don't know. There's something about it. And there's a lot of interesting data being looked at by like doctors and stuff in the laboratory about how people communicate in person versus how they, do so online or whatever. So, long story short, man, I think it's cool. And I think it's real cool, man. And, I know you have a lot of knowledge about energy and all that stuff. And it seems like oil, if it's going to do something, I think it's going to be a while, and there are a lot of variables in that market, but metals they seem hot, and it seems like metals are far more scarce than oil. And I think that's why you're going to see the volatility that would give anybody in markets a bit more of an interest in that world,
Well, I think to your point, the energy side of things is the most political market of them all, right? Because it's basically the lifeblood of our current economy and what flows through, whether it's diesel and plastic products. And like, people just assume, it's just for gas. It's like, gas is like a relatively small portion of overall oil demand. So there's a bunch of other things that it flows into, and it's transportation costs and all these different things. But the point is, like, it's the most political market out there. And so that means low prices are going to be what the politicians want. Yeah. And that's The other thing too, to kind of factor into that is generally like oil and gas is a better business than like mining for precious metals, unless you find a mega deposit. Like mining's very hard, whereas oil and gas is generally better when you get it up and running, especially if you look at so many different resources that, right, it can be 3 to 6 months to get to first production for like certain assets if it's relatively within like the existing infrastructure, versus getting a new mine to production is like what, 5 years minimum, probably 10 to 15 at the pace some of these Canadian companies go. But the thing about it is like it's a very difficult business, and I don't think we're not going to run out of gold to mine, but the easiest stuff has been found.
Yeah.
And those are going to be the high grade, right? If you look at what happens over time is, unless you're going completely greenfield, like starting from scratch, the high grade and the step outs and the nearby deposits and the stuff that kind of comes from that, like that's been found and for the most part mined, right? And you're going to see that in Nevada, where like there's not that much land left to consolidate and start producing and bring on mines. Whereas other parts of the US, I think there's an argument that we could have a lot more production from some of these different places if we had different policies. And like one of those places is Colorado, but believe it or not, like that's how California became a state, was the gold rush, right?
Yep.
And you can still find like placer gold in streams and creeks and rivers, like near some of those gold lode deposits. And so there's definitely still gold that would be economic at current prices in California. The problem would be like, hey, can you put together a real mining operation to go start producing 50 or 100,000 ounces a year in California? Like, I think most people wouldn't even bother to try. And
no, I wouldn't.
Well, that's the thing is, if their policies change and they decide, hey, like it is actually kind of important to have a natural resource based economy for the jobs it creates, and it creates them like in a location, right? You can't offshore gold mining jobs, at least not yet. And
yeah,
you look at the multiplier effect it has for some of these local economies. Like I guarantee you, when the Sunshine and the Bunker come online in the Coeur d'Alene, like Silver Valley area, like you're going to see a local economic boom happen up there, right? And it's not just because silver's high and Hecla pays like a $30 an hour bonus on top of regular wages because of profitability of the mine, like stuff like that. It's not just an economic boom because, oh, silver's 80 an ounce or 100 an ounce. It's because like there's way more activity that happens around a mine. That's not just the miners go and they work and they have their 12-hour shifts. It's like the restaurants, the extra businesses that supply them, that like you go down the list, there's like having a mine in a town, assuming you can do it without environmental disasters, like that's like a giant economic boom for that area. So I think it's something to think about. And I know a lot of people, maybe not as much on our listeners, but a lot of people in the US have a not in my backyard attitude towards these things. It's like, look, we're going to need to have the capability to produce and refine a lot of these things here in the US if we want to like continue to compete on the geopolitical like global stage. So it's definitely something to think about, because all these different things, like you see these different trends and different developments, but I think we're going to have much more rational policy towards the resource sector over the next 5 or 10 years than we have had for a long time in the US.
I think, yeah, the shovels and the picks, right? That's the old adage. Like,
yep.
The people who got rich in the gold rush were those who were selling the shovels and the picks, not the people who found the gold.
Yep. The guys mining the miners. There was a couple people up in Coeur d'Alene, they called it that, mining the miners. That's how some people got rich up there.
Oh, heck yeah. And when you have gold fever, you know, it's like, so, I mean, at this point, I don't know if we're going to be in a gold fever scenario per se, but I would say that you got to watch out for those opportunities. And I think you hit it on the head. And I think there's going to be enough like ramp up in a sense, because for example, we know you, so you'll be able to keep us in touch with such things. And by the way, if you want to continue to follow Ben, it's Contrarian Corner with 2Ks, and you'll find him on Substack. What do you call it? What's that thing? Elon's deal? X? You'll find him on X. Sorry, I was literally sick for like a week. I never get sick. Like, it's just something nasty hit, and I don't know what happened, but I got sick. I'm better now, but I'm not as quick as I should be. Point here being that Ben is giving away a ton of info, and he's not asking for money, or if he does, it's not very much. I'd pay the guy. Just go join his Substack. If you want to make money, listen to what Ben has as far as his research. And I know, Ben, you don't give any investment advice. That's not what you do, but you definitely share a research that, in my opinion, is worth a lot of money. So none of us in this like finance game, we don't ever get every single one right, but the information is always valuable, and we get more right than we get wrong. And that's what matters, right?
Yeah. Well, I mean, the whole research project and process is the way I kind of look at it is like, if you can provide a service that people find valuable, they'll like basically pay you for it. If they don't, then they just decide, hey, this is good enough for free. And that's totally fine. Like, if you just want to listen to the podcast I put out, like, great. Like, would love to have as many listeners as possible. But I do appreciate anyone that's willing to support my work and kind of fund the stuff that I've been able to do. And like you were saying, like, there's no one out there that's going to be right 100% of the time on every pick and have the perfect entry and all this stuff. It's like, look, I think the risk reward on this is attractive. I'm buying some. And if you do your research, like, here's maybe a good starting point for the work that I do. So like, that's kind of the way I look at it. And I think there's a lot of opportunities in the commodity space right now. And that's where I've been focused. And for anyone that's interested in the metals, even copper and some of the smaller companies, like I'm still trying to set up a time, but I'm going to be having the geologist for a small company called Andina Copper on my podcast here in the next, I think, 2 weeks. He said he would be able to come on, but they've got some very interesting projects down in South America, like potential giants. And if you look at what happens to some of these copper juniors, when they find big ones, it's look, it's not like a 10% portfolio holding, but it's like, hey, like, I'm going to buy like $500 of this, $1,000 of this, like small amounts. And if you get it right, like, those are the things that go ballistic in a bull market for the metals. So that's like, I'm just trying to find interesting ideas. Sometimes it's more speculative. Other times it's larger developed companies that are in different sectors. But I think the research is pretty solid and definitely a good place to start. So for everyone that does support me, I really do appreciate it.
Yeah, it is good stuff. And your podcast is actually growing pretty well. I mean, it's got more than Algo Factory by far. I think you're 15 times as many people as I've got, and you built it within like a few months. So
I think it's a couple of years, but it's just the guests. Like the guests bring in their audience. It's not so much that what I do is anything special. I like to think I'm good at asking certain questions at certain times, but I've been able to get some good guests on. So
nice. Yeah, certainly that's the case, which makes it all the more worth it. So everybody, thank you all for watching. Ben, any final thoughts?
No, I think that's what I got for today. We can save the rant on Epstein and some of the other topics for next week, maybe, and get into some recent topics there, but don't want to turn that into a weekly occurrence if we can avoid it. So
yeah, I think we're in an Epstein bubble. I think it's going to be, honestly, I think people are good. I was tired of Epstein about a day or two after the release. I was done with it. Like, I'm just like, all right, fine, whatever. But I've been telling people, and I know this might be something I should not betray. I think I've seen enough shit in my life, like in real life, to where I'm numb to it all, or I don't know. It's a terrible thing to say because I'm not. I think that all these things are terrible, and regardless of what level of crime is committed, and when you start, when you involve children, you just belong in the wood chipper, and it's as simple as that. But that to me is a math problem. It's like, okay, he did bad shit. That's where he belongs. End of story. Now I got to go make some money. Like, that's, you know what I mean? Like, I don't need to spend time just emotionally releasing,
Yeah.
I'm more interested in I think there's a bigger story than the children thing. I don't know if there's any bigger story, but I think there's another story. Let's put it that way. I think there's a story that has
the network and the money laundering and the.
Yeah, I think there's a story that has, let's just say, a far bigger economic consequences than the other stuff that's just terrible. And I think people are ignoring that, and I think they're ignoring it by design. But that's just me. I know I'm not alone thinking that. And this is Ian Burlingame's been saying that for months. And now you're starting to hear guys like Nick Fuentes say that. I'm like, dude, Ian Burlingame has said it from the start. The money laundry, the fixing, all that stuff is actually, when it comes to the elites, when it comes to the money people, when it comes to the big, like, where millions of people die in wars, like, that's the bigger story. But to the common person, the stuff with minors, that also needs to be brought to the fore. And I think it's a really good way to get people to be in the right direction on how to handle these people. So
yeah,
well, I don't want to say much more than that.
Yeah, well, it sets off the disgust reaction, and that's why I think more and more people are waking up to it.
Hey, you said it. So that's it. So I don't want people to think like I don't care, or I'm trying to explain, like, I have kids. I don't want to think about that shit. I fucking know it's bad, and I would be like the guy throwing the wood chipper, but I think it's time to, once you know the information, okay, fine, let's move on.
I guess here's the final thought is, I think everyone's ready for ropes and guillotines for this stuff. And I think people are ready to make capital punishment great again. So
yeah, I was ready for ropes and guillotines years ago on this guy and on a lot of guys like him. And I didn't know the extent of anything. And I was all ready for that. So for me, there's no change in action. There's no change in my theory on how these people should be handled. So,
yeah,
and I'm more of a functional person. But Ben, always a pleasure, dude. Thank you for coming on. And, we'll do this again next week. And dude, I'm just glad you made that trip up there. It's awesome that you did it.
Yeah, no, it was a lot of fun. Definitely learned a lot. So yeah,
right.
Definitely. For anyone interested in energy though, keep an eye out for that podcast I'm putting out probably Thursday. So it'll be interesting for anyone interested in offshore oil services. So keep an eye out for it.
Yeah, that's your Brett. That's like your bailiwick, man. You spent a lot of years studying that.
Yep, for sure.
All right, everybody, we'll be back. I don't know if Gus is on tomorrow or not. I'll find out. We'll let you know in the Discord. Thanks for watching, and we'll catch you soon.